Welcome back. Take a look at the commodity prices, and we've seen sharp declines coming in for this one as well. And it's slightly unnerving because commodities are raw materials driving global economy, and the kind of tangible commodity price declines that we've seen in last 1 week or so have been quite on the sharper side. Crude oil prices are on your screens, and we've seen nearly 3% of a decline coming in right now. This comes in on the back of 7% decline on Friday. On a weekly basis, we're down by 11% for the crude oil prices. And for this year now, we are trading at around 2021 lows from the month of April in sense of crude there. Well, a couple of factors here. One, of course, is all about tariffs and the sell-off expectation that you could be looking at demand getting impacted. The second is about OPEC and allies increasing production 3 times more than what the street was anticipating. It also is about Saudi Arabia cutting official prices to its Asian consumers for the month of April and May as well to almost lowest in 4 months. And it's not just about the crude oil prices. If you look at the gold prices, the sell-off in other asset classes has led to that being set off by selling gold as well. And very huge volatile moves is what we've seen in case of gold as well. Remember, it was last week that we saw an all-time high of 3,167. We saw nearly a low of 2,967 into the Asian markets today and currently trading at around 3,040. So very, very volatile moves coming in. In matter of 24 hours, it's about $80 to $120 of a move in gold is what the markets are dealing with right now. I also want to talk about what Powell said, and he said that Trump new tariffs are larger than expected, and the economic fallout, including inflation and slowing economic growth, is something that cannot be ruled out, and that in turn perhaps would be supportive for gold going forward. But one area that has seen constant declines and sharp ones has been metals as a sector. Multi-month to multi-year lows coming in for many of them. Copper prices, for one, are trading at a 3-month lows. You have nickel prices trading at 4.5-year lows. If you look at zinc prices, that one is at a 9-month lows. Aluminum is trading at a 7-month lows as well. So clearly, with what's happening between US and China in sense of retaliatory tariffs, does impact markets there. But joining us now is a very special guest to take us through all of that volatile moves is Jonathan Barratt, CIO, ETO Markets. Jonathan, hi. Difficult times, and Monday morning is no different with the kind of sell-off that we've seen in various markets. I want to start with metals first because that's top of in sense of headlines. The sell-off in copper down 12% in last 4 or 5 trading sessions. Aluminum, zinc for that matter as well. How do you see the markets right now? Is there any side that you see when the markets could stabilize, or this is a new norm, at least for the very near term?
Manish, good morning. Look, I think it's a new norm, to tell you the truth. I think it's going to take a long while to get out of the current malaise that we're in. And we really don't know how companies and countries are going to respond to the tariffs unless we see someone backing down, unless we see Trump back down, or a lot of negotiation very quickly. But you also got to think that copper was trading close to those record highs and at record highs, and then all of a sudden we've had a short, sharp sell-off. So we actually had a market that was extremely long, and now people are sitting on positions which perhaps are the wrong levels. So I get a sense that, we've got pretty important highs in place for a lot of the metals, and I think we're continuing going to track lower from here until we get some positive signs that China starting to pick up in terms of its economy, or we start to get some back down in terms of the tariffs. But at the moment, it's still a bit foggy out there, but I think the market will be on the downside for some time to come.
And how much of a decline are you anticipating, Jonathan, from these levels? Is it 3%, 5%, 7%?
Well, if you think where LME copper is at the moment, I think it can. I think one of the big areas of support is around that 8,500, but I wouldn't be surprised to see around that 8,000, perhaps a little bit lower. But that's going to take time. But I do think that, yes, about another 10% on the downside is something that we can realistically look at.
Now, the 10% down in case of metals there, but what's your sense on crude oil prices? Because we are at 60 and below 60, and the markets are now talking about 55. I mean, that clearly happens when you see a one-side sell-off. There are more lower sides that open up. Are you as bearish on crude?
I am bearish. I think when the oil's being hit by a few things, as we know, a little bit of demand destruction is a story, and as you correctly pointed out, OPEC increase in supply, and also some pricing from Saudi Arabia, which is more of a discount. So there's a lot of dynamics there. I think OPEC perhaps acted too early in terms of what they were trying to do. And I think you'll find that there will be an about face there pretty soon just to stabilise. Remember, oil in itself, we know how volatile it can be. And I think if we can't pick up that demand story somewhere along the line. I think once again, we'll see prices continuing to fall. And we know when oil is on one way, one directive, she can go pretty quickly.
Also on gold, and this has been very, very volatile, of course, getting stuck in sense of a set-off in what we are seeing in other asset classes. Further downside is what you're anticipating, because markets tell us that you could be looking at some more profit-taking, 2,500 kind of levels coming up, but then there's 4,500 as well in next 2 years. Big ranges coming in here. What is your sense, your levels for the near term and slightly longer term?
Well, over the last week or two, my trading P&L hasn't been that good because it's been exceptionally volatile. Looking for it to trade higher, and then all of a sudden that reverse. I would have thought with that instability that you would actually find more investors going to gold. But as we do know, when you get margin calls, when you get a lot of volatility, people tend to sort of go out of gold and they look so that can shore up their other assets. And I've noticed that has been a trend for quite a few years. The volatility is there, people go out. But when we can see that there is a track that suggests things are going to normalise, I think you'll find that gold will start to pick up. Remember, central banks have been in there for quite some time, and I think they'll actually see this as a golden opportunity just to continue to buy, just to continue to shore up their own books. So I do think that eventually we'll find a low, and then I think you'll find that gold will pick up. Remember, the US dollar index has been high for some time, and I think if the US have a parallel policy to stimulate their own exports in the weight of the tariffs, then it makes sense to have a weaker dollar regime. So, and I think that will eventually help gold. So at the moment, a little bit lower, but I do like the dip on it.
Right. Jonathan, this is Vivek joining in. One question, you spoke about how, there is probably an urge to keep the dollar index at slightly lower levels. At this point of time, how do you see metal prices, and especially, steel prices, given the fact that when you're looking at equity markets worldwide, and especially in India, metal stocks have taken a bit of a beating, be it copper stocks, be it companies that make steel, all of these stocks have seen significant selling pressure. How do you see steel prices, and how do you see metal prices pan out from here on?
I think at the moment we've got to go through this adjustment phase. I think it's unfair to be able to say 6 months what will it actually look like, what will prices look like. And the reason, because that is we're going to go through a period of volatility where we've got to see how these tariffs do play. If you were a betting person, you'd say, okay, if you keep tariffs on and you keep tariffs as high as they are, that's got to be inflationary, that's got to be bad for the economy. Therefore, base metals and other metals, steel prices should actually come lower. But having said that, in China, you're looking for that economy to turn around. And if that economy starts to turn around, then they obviously need the support of the metal side. So if anything, still need a little bit more time in terms to work that out. I think if China can pick up, remember we've got inflation figures out this week. If they're a little bit more robust and we're out of that stagflation, I think that will support the steel prices. If in fact we see inflation and it comes out and it's still quite benign, then that's going to see a negative effect to it. So China's the big thing, but also how we digest with the tariffs and how that plays out in terms of the global demand for the commodity or commodities. We just got to need a little bit more water under the bridge.
Jonathan, clearly, the current market sell-off and especially sell-off across commodities is a knee-jerk reaction as far as, the tariffs are concerned. Just a couple of months ago, we were actually talking about the aluminium markets being in a bit of a deficit. So do you think, supply-demand there has changed to an extent to which we are seeing, almost 10% downticks daily?
Well, I think what's happened is that there's a change dynamics. If we looked at a deficit, like in sometimes with copper, we also feel there's a deficit there as well in terms of supply. But all of a sudden the economy slows down, then it's not a deficit. And then it sort of balances itself. I think the supply side, remember there's a whole new supply side dynamic which has been changed. People are trying to find new markets. People are trying to find, markets they can buy from and they sell to. If you take the US out, or parts of the US economy out, and you try and filter it to other countries, that's going to take time. Contract's going to take time. And I think it's within that time period that we'll see changes. But at the end of the day, supply side is important to where the metals trade. And at the moment, the market is focused on whether or not we're heading into a recession, how deep that recession will be. And as a result of that, metal prices should remain under pressure.
Much uncertainty. Thank you very much for joining in. It's almost gotten impossible to predict. Thank you for trying. Let's slip into a break. On that note, we'll come